Okay, a quick update. It is about 10 minutes after 12 p.m. New York time. It's Monday, August 19th. We're looking at the euro dollar. I'm going to start here. I posted in the private beta group area let's go ahead and go here. There was a range here on the dollar Canadian and what looked like a possible breakout to the upside. So then at that point, I would immediately go to the dollar to try to see if it's like one of those typical Mondays. So every once in a while, you might hear me say it's a typical Monday, meaning that it's pretty slow. I mean, there might be a little bit of activity in one currency pair or another, but you might be sitting there staring all through the London or the Asian and London, and then maybe at one point during the New York session, something will move. And very often, even that move, you got to calculate, could you get stuck into a trade that really doesn't go to the expected targets? Is there enough momentum behind it? What's going on today? Is there enough to drive it to, specific levels? And I'll talk about the pound dollar, but this one, again, going back to, this is the dollar Swiss, 1 hour time frame. So there was a breakout right here. It looked like a perfect continuation breakout trade. Actually, I need to go to that page. So as far as the breakouts go and the indicators that I use for the breakouts, it's this template right here. So that breakout right there looked like a good solid continuation breakout trade. So I need to make a decision at that point, right? So at that point, there's my continuation breakout signal candle, and I have all of these indicators more or less confirming. A little bit of divergence here, but you could see that, I mean, even if it stays to the positive side, just because it's in the MACD is positive does not, guarantee that it has to go negative right away. I mean, it could, but you get the point. So 2 out of 3 of the indicators are always going to, especially these two, the Bollinger Bands and the CCI, they're always going to give me the confirmation that I need looking at the chart technically, but then I've got to decide at this point, based on the momentum and the volume and the amount of participation that's going on today when it's like a typical Monday, which means it's going to be pretty slow, relatively slow, light volume, or not as much volume as we could expect through the rest of this week, because there's a lot of data points throughout the rest of this week that could really provide some good opportunities. I don't know that they will. I'm just saying that they could potentially provide some good opportunities. So again, on a Monday like this, we could expect to see this kind of movement. Even though this is a continuation breakout trade, I went to the dollar index, and then on the dollar index, you can see that it wasn't breaking out. And that was the screenshot that I pointed out. So let me see if I can actually bring that up. I'll show you the screenshot for the. Okay, so here's the screenshot of the dollar index a while back. So when the breakout occurred here, dollar Swiss, I go to the dollar index. Now, I said this many times. You got to be careful with this. So this is one of the other reasons why I really want to talk about this particular issue and the way I confirm this. So sometimes I'll get a continuation breakout trade that sets up on the dollar index, 1 hour time frame, using all the indicators that I use, the same template, the same breakout template that I use when I'm trying to trade one of the Forex majors or whichever pair. So I get a continuation breakout trade on the dollar, US dollar. Generally, that would develop, the breakout would occur because of some particular event that the market's waiting for. There's that reevaluation in price, and everybody's trading that. Whether it's non-farm payrolls, retail sales, whatever you want to. It depends on the cycle, right? It depends on where we are at that particular time in the economy and the cycle. So whether it's also a political event. So just the fact that there was no continuation breakout trade set up here on the dollar index, that doesn't necessarily mean that the dollar Swiss won't work out and won't reach its 55 pip target. But what I'm trying to assess is, do I want to get into a trade early Monday morning New York session on a currency pair that typically can, in some cases, move pretty slow, which is the dollar Swiss, even though it's the only one that gave me a good solid breakout candle? And do I want to get into the trade and then end up holding it this time tomorrow? In other words, do I want to tie up my capital in a situation like that? Not to mention there's the psychological impact and the time, how much time is consumed by managing and watching a trade for 18 to 12 to 24 hours. It's just, I've done it so many times in the past, and it's not worth it. And that's one of the reasons why I say that I trade much less now than I did before. But I figured out where I could eliminate some of the waste, like some of the wasted time, the wasted hours. Very often in a situation like that, even if it does work, the continuation breakout trade on the dollar Swiss, even if it does work, but it just goes flat and sideways, if I don't get in now, I might be able to get in on a second entry. I call it a second entry opportunity. If the trend continues to the upside on the dollar Swiss, maybe later on or tomorrow, this chart here, the dollar index, maybe this one will print a continuation breakout trade to confirm that the dollar Swiss is going to go higher. And then I would get another opportunity. I would get an easier opportunity. And when this one confirms, it's most likely going to set up during a more active, busier session, let's say the New York session, with some economic data, maybe Monday or Tuesday or Wednesday. Something to that effect is what I'm getting at. So I'm trying to determine if I'm going to put my money into the market, I would much rather have open positions that are going to reach their targets a lot quicker. Excuse me. So that means you're just going to get your reward a lot faster, and that's the key to the whole thing, right? You get in one trade, it gives you the opportunity to earn profits there, and then look for another opportunity. And you can calculate a lot of these opportunities just by looking at the economic calendar, figuring out when some Fed officials are going to be speaking. Those might provide opportunities, and then being prepared where you've got all your ammunition available and you're ready to go and you're well rested, rather than just getting into a trade that just goes sideways for a couple of days. That's what I was trying to determine. So again, if I can see that, and sometimes I can't, right? Sometimes it's really hard to figure it out. Sometimes the market will be moving really nicely, quickly. You can see volume levels in other areas. You can see that the market's really being active. And then you get a move that lasts like 30 minutes to an hour, and then it stops. And you wonder, well, why did it stop? How come it didn't keep going? Sometimes you can't see it. Sometimes you can't figure it out. It's not always going to be like this. It's not always going to set up this way. But with opportunities like this, it's a good opportunity. It's a good chance to really make a solid decision. Should I get into the market or should I not? Should I wait? And I know how hard it is. I could go back, later on today or during the Asian session and watch this thing run up another 30 points. And then at that moment, you might be thinking, and I know because I did it, you might be thinking, well, that was stupid. I missed it. I should have taken it. And then you take it the next time with all the information that we just acquired and we analyzed here, breakouts, dollar, Monday, all of that, taking all that into consideration, and then it doesn't work out the next time, or it just goes sideways and you think to yourself, well, I've got all my capital tied up in this dollar Swiss because it was the only one that really gave me the trade. But then all of a sudden, the euro dollar breaks out on Tuesday or Wednesday, and it's a great 55 pip move. It runs to its target in about 2.5 to 3 hours. That's a much better opportunity, in my opinion. There's too many things that can happen between now and the next 24 hours, or if and when it would hit its normal targets. So this would be a continuation breakout trade that works, that looks like a good signal, but I would just avoid it altogether because I know this pair sometimes will move a lot slower, and I know that it's Monday, and I can see that the dollar's not really participating and following along. There's a lot of information here that would support and help me, have comfort in the decision to just stay out. That's a hard thing to do. I struggled with that in the first year of my trading career, and primarily the reason that I struggled with it was that I had experienced so much loss. I was just only focused on figuring out a way to make some money or to earn back a loss. And I wasn't focusing in on the good trade opportunities. I wasn't even taking in the information that I just shared with you here. And this is really easy. Like this isn't very much extra work to go look at the dollar. And like I said, this doesn't always give me the full story or the full picture. Sometimes I've got to go a lot deeper to find that information. This is just one area where I looked, and it's easy to do, and it was easy to confirm today. Today, it just happened to be one of those days where it was easy to confirm. So while I make it seem really simple, there's more to it than that, and there's a lot more that you need to look at as far as confirmation. But today, that was relatively an easy choice, just based on that one chart, the dollar index. There are other things you want to look at. So I avoided this one. Again, if the dollar breaks out to the upside, let's say tomorrow or Wednesday, then I might get an opportunity to trade this one, and I would trade it to the expected targets based on if this was a valid continuation breakout signal candle. If this was all valid, I know where my entry is and I know where my 55 pip take profit level is. So if everything here holds, the structure holds, and then I get a breakout on the dollar, I might continue to trade or get an opportunity to trade this to that 55 pip take profit level. Remember, I talked about the structure. If the structure remains intact here and it doesn't come back down and take out the low of the price swing that created the breakout candle, then everything's good. You know, maybe we're going to get a little bit of a retracement. I know this would be a great opportunity for people to start immediately putting their Fibonacci's in here as a tool. And it works. I mean, to a certain degree, you can figure out at least where the retracement levels are, right? We've got that low from this morning. It's not the overall week's low. There was one here right after the open, but this is what we've got, this price swing right here that created that breakout candle. This is what I'm talking about. So if price comes down to like the 618 and bounces, maybe that's a good opportunity. And then I would be looking for a breakout on the dollar. And if the breakout on the dollar happens and I get a bounce and this thing starts taking out the high here again by that 3 pip entry, I would trade it to the 55 pip take profit if everything is perfect at that time. I'm just sort of looking way down the road here and just giving some possible scenarios that might play out either way, and I have to be prepared for them. But again, if price comes all the way back down here and takes out this low, then this continuation breakout trade would be canceled in my opinion. There's no way that I would trade it, even if it bounced off that low and went right back up and took out the high by 3 pips. I would stay away from it. If price takes out the low of the price swing that created the signal candle on the breakout trade, then I cancel the trade. So again, I would keep an eye on it. Like I would leave the Fibonacci tool here just to be aware of the depth of the retracement. But right now I'm not going to trade this. And it's not time to sell it either. I wouldn't really be prepared to sell it. I mean, it might have given a small scalping opportunity, but I don't know how much lower this is going to go. And when I see a good solid candle to go long, and then I'm still, in this little transitional phase where I'm not really too sure I need more data, I'm not going to immediately sell it just because. Like, that's just a small scalping opportunity. I have no idea. So I would keep an eye on the dollar over the next 24 hours or so. It's still inside of that range of consolidation. It really hasn't broken out. But this was that screenshot that I posted a while back earlier today. Let's go to that was the dollar. So it's euro dollar. That dotted line right there, that blue dotted line, that's the start of the week right there. And this is just sideways. I'm not going to trade this right now. I mean, I don't know what else to say. I'm not going to short it because I don't think it's going to go too far. I'm not going to go long because I don't think it's going to go too far. Basically the same situation and the same setup for the most part. Not that this is a breakout in the opposite direction, but very similar to the dollar Swiss, trying to determine, is there enough participation? Is there enough momentum that if I'm going to go long, I could really expect it? Let's say if I took this candle here, I mean, you might get in here. Everybody's got their own opinions about what they would have done looking backwards. But if I would have looked at a bullish candle, I'm just trying to get a measurement in here. So the close is 3. I would have targeted 20 or 50, and it only went as high as 12. It's not covering much of a distance. And I'm not saying that that's the entire distance in the range for today, but it's not much more than that. So things are pretty flat here. The only one that really moved around a bit was the pound dollar. So the pound dollar, I considered going long on a bounce here about 2 hours ago. There was some divergence. It looked, like on a smaller time frame, 30 minute. I was even watching the 15. I don't spend too much time watching the 15, but I was just looking at the 15 to see how it was setting up as well. But this printed a signal candle. There was a continuation signal candle early this morning to the downside. The only problem with it is that there wasn't enough confirmation on that trade. That's why I didn't short it. So it didn't surprise me to see the retracement, but the retracements, again, I can't always gauge how far those retracements are going to go. Sometimes those retracements will set up, and then you'll get like some piece of information. It'll hit the market, a comment or a statement or some kind of speculation that people respect and people trade off of, and then you get a pop even a little bit further and it surprises you that it even went as far as it did. That's what happened to me this morning. So I had a continuation breakout signal candle right here, which would have given me an entry of about 19. So I was watching it. The problem with it is that there's a lot of divergence on that signal candle. The Bollinger Bands are not separating away from each other on that signal candle. It's not showing a sign of strength. I really wouldn't expect too much of it to the downside. I had to calculate where my 55 pip take profit level was, and it just didn't look likely to work out. It spiked down a little bit, turned around. When I saw some bullish candles starting to print here, I could see the divergence, maybe for a short-term bounce. But then again, we see this all the time. where we see a bounce or a retracement to the level that it broke out of, and then it stops. And that's why I didn't take it any higher. Now, I would have normally traded it if I got into this trade to the 50, but the distance to where price ran into resistance or old support was beneath and below the 50. Had it been above the 50, and it would have given me enough room to, let's say, take a trade, I would have tried it and managed it. I would have earned maybe anywhere from 15 to 20, maybe 30 pips. It really depends on where the entry is. So there, in my opinion, this was still a relatively tight, small range, and then you get that one pop right there where it just kind of jumps up, and it ends up going above 50. But again, when I see breakouts like this, very often we see retracements that go right back to the level that it broke out of. We see this all of the time, not every single time, but almost all the time. This is a very healthy retracement, very healthy, this is healthy price structure. If price is going to continue to trend down for the week, this isn't out of the ordinary. For the week, we've got a high, a low, a pullback, and then it could make a new low, and then that would just set up that whole new downtrend, lower lows, lower highs. I don't know yet. I still need more information here. But if it takes out these lows and starts to go down again, well, at this point, I could make some adjustments. I could say I've got this week's high and this week's low. And then if I get a continuation breakout trade below that support, maybe it would be an opportunity. Maybe the 4-hour chart would also show a continuation breakout trade. So there's many things that can happen as a result of me not participating, but waiting. Many things that will happen, and it'll cause price to move around and set up that structure that I need to identify and confirm one of my trades. So right now, again, going back to the structure and the rules here, or the structure, the price structure that we see, we get the breakout, the retracement to the level that it broke out of. Yeah, there was a spike, not necessarily anticipated, but the candles so far, the bodies of these candles are still below and closing below that support level. That in itself is another clue. So I've got to be paying attention to this. Once I get maybe 2 to the left and 2 to the right, I might have some confirmation that this would temporarily hold this spike, and this is as far as it's going to go. That doesn't guarantee that, but temporarily that's what it would indicate, and that's what I expect. So I'm not going to sell it here either. I don't have a signal to sell it either. But going back to the initial breakout, that wasn't qualified either. It wasn't confirmed. There was still a lot of divergence, which would lead me to believe that there was going to be some kind of a pullback like this. So I stayed away from that one. I know that there was probably about 20 pips in here, depending on where you get in, but I stayed away from it because I really thought it was just going to run right into that resistance and not necessarily hit the 50. And I would have targeted the 50 psychological level. I almost always will target psychological levels inside of ranges like this because they repeat and they get hit over and over and over again. They're very consistent, very reliable, and you got to be really careful and you got to be paying attention to your entry. You got to make sure that there's enough money there to trade, and you got to be watching your stop. So we've covered the euro dollar sideways flat. I'm not doing anything. I mean, look at these. This is a 1-hour chart. It's just you see what I see. There's nothing really to say. There's nothing to trade here as far as I'm concerned. I'm not going to scalp this for 1 or 2 or 3 pips over and over again all day. Again, back to the pound dollar. I'm going to continue to watch this. This might be a clue in itself. If it holds and comes back down here, maybe I'll get another bounce off of support. Maybe I'll get a breakdown. I'll be watching the 4-hour. I'll be watching the daily if it continues to hold here right into the close. And then the dollar Swiss. Again, I told you about the dollar Swiss. I just felt that this was just way too slow moving. Not likely to go anywhere. And again, the longer I hold on to a trade, 12 to 24 hours, the more likely it is that it's susceptible to more news, some kind of a turnaround. Price could spike quickly. There's just so many things that could have an impact on the trade. So I want to get in and find these opportunities where I can get into the trade and out of the trade relatively quick. I'm hoping with my day trades to get in and out in the same session. It doesn't always happen, but that's my intention when I get into these trades. I am prepared to hold if I get stuck and I miss these signs or I can't find the clues that would indicate that it's not going to go too much further. But usually, especially on a day like today, there are signs and clues that that price really isn't going to go too much further. It's just going to stay in a relatively tight range. Let's look at the dollar yen real quick here. Basically the same thing. This is the start of the new week right here, this dotted line. A little bit of movement, but it's still stuck in this range. I got to be paying attention to last week's high, last week's low. It is close to resistance from last week, or a few areas of resistance. So I'll continue to watch it, but again, going back to that dollar chart and now looking at Japanese yen futures, I just don't think that there's enough momentum to expect price to reach even a psychological level if I was to trade this. At one point, I considered this one. So this is a 1 hour chart. That close right there is 55, and it only went down as low as 44. From 55 to 44. That's not much of a range. That's not much of a distance. And that doesn't mean that it won't, because it could. It could move up a little bit higher and then drop down again. Or it could just continue to go sideways and really not go much further than that low of 44. Which means we're trading in a really tight range right now at this time, and there's just not enough participation. And again, I would be stuck in that situation where I'm getting into a trade, I'm putting my capital, regular full size, on a trade, and then having to have it tied up, not to mention the amount of time that I'm sitting there watching it. It's just not time. It's not effective. It's not an effective use of my capital. It's not an effective use of my own time. You need your downtime. You need to get away from the charts. I know you couldn't have told me that in the first year of my trading career. I wouldn't have listened to anybody if they would have told me, you need to take some time, you need to take a break, dude, you need to get outside, go for a run, go play with the kids. If somebody would have told me that, I wouldn't have listened, because again, it all came down to the desire and the fear. So the desire to make money and the fear of the losses that I had experienced, and that's not the right mindset for trading. It is something that you're going to experience, you're going to have to work through, and it is part of trading, but the success comes in overcoming that. And very often what usually helps is just more exposure to that situation where you experience a fear. You go through these situations where you say, okay, well, what if I miss it? What if I miss it? What if I miss it? And it turns out to be a great trade. With all the information that I showed you and how I'm right now at this moment able to identify that there's not a lot of volume behind it. I mean, clearly, if I'm trading the dollar yen, I'm looking at Japanese yen futures anyway, so I see volume there. Same thing with the dollar. I mean, there's things that you can do. We'll talk about that in another video, but what I'm getting at is, with all this information, you can still say, okay, even though I know what I know, I still think maybe, and this would be that mindset that you shouldn't have, right? This is a mindset that I used to have. I would think, well, I still think maybe if there's a chance, I got to take it. I got to take it because I need the money. I got to take it because I got to try. And if it takes off without me and it ends up working and I see a 60 pip rally today, which is not going to happen on the dollar Swiss, if I would tell myself these things. So I was just misleading and misguiding, and then I was ignoring what the market was telling me anyway. And that's the problem. You get into that mindset where you're ignoring what's clearly right in front of you. So the more you expose yourself to that situation, should I do it? Should I not? And then every time you don't do it, and you feel and you really believe that you shouldn't be in the market, you should calm down, go get away from the charts, go to sleep, get your 8 hours in of sleep. The more you do that, the more you start seeing the benefits of following proper protocol and behavior that supports your ability to make a solid financial decision and to absorb the information that's available. If you're sleep deprived, you're not going to be able to take in all of the data. You're not going to be able to look at and process things. I know I did it. I know a lot of other people do it. They still do it, and it's hard. And if you're in that situation, that's why I'm talking about it. If you're in the situation where you're doing that right now, it's going to be hard for you to let go, but you got to learn to start. You got to start letting go. Make small steps, small advancements. Even if you can say, I shouldn't be in the market right now, I'm just going to walk away. And you do it, focus in on the fact that you were able to actually break that pattern. Even if you're likely to come back 2 hours later and jump into the trade because you can't resist it, at least you're exposing yourself to that more and more. And that really, unfortunately, is one of the things. When I look back at my career, there were certain things that I did that made big changes for me, maybe overnight. But not everything that I did was a big change overnight. I've been asked that question many times. Was there one particular thing that made a big difference in your mindset or in your trading that helped you to start making the money that you're making, right? Like that, I've had that question many times over the years. And when I stop and I think, so many things pop into my mind. And it's not just one particular thing. It's the accumulation of making these decisions over and over again, exposing yourself to it, accepting that this is what it's going to take, that it's going to take some time. And the more you expose yourself to that, the more time you have to put into this, the sooner you're going to get there. That's the one thing that I remember telling myself, is that I know that this isn't always going to make a change for me. The good things that I was trying to do in my surroundings, in my environment, my lifestyle, I know that it wasn't going to make me instantly have 100% winning trades across the board and I was going to make all the money that I wanted like in a month. It wasn't going to happen like that. But I kept telling myself, the more I do this, the more I follow this, because I know it's the right thing to do. You know that some things are just right, right? Like getting sleep, walking away when it doesn't make any sense, when it doesn't feel right. You've been told these things, you've experienced these things where if it didn't feel right and you took the trade anyway and then it fails. And then you get mad at yourself because you knew better before you even took it and you took it anyway. So the more times you do that, you're just like reinforcing that kind of behavior. So the more times you experience, you run into that moment where you say, well, it doesn't feel right. I don't know. Try and break away. Yeah, you probably won't be able to stay away from it for too long if you really don't know for sure, or maybe in the beginning, but try at least initially. Just walk away for an hour, go take a nap, go outside, go to run, go to the beach, go be with your wife or your husband and kids or whatever it is that you do that makes you happy. Try to distract yourself from that and see, and then come back and see what happened. And even if it does break out, well, then that's not. It doesn't mean that you're stupid and that you're not going to be able to figure it out. Or there's another failed opportunity. No, it just means that right now there's more for you to understand about how to gauge and time this. That's it. And the more you dig in and research and read and expose yourself to it, the sooner you're going to be able to get to those aha moments where you see it and it makes sense. That's all that it means. It's just time. It's just time. It's that repetitive. It's like they say, you hear people talk about, basketball players and the free throw, that one basic move that they drill no matter whether they're professional getting paid millions of dollars or in high school. It's that one particular thing that makes all the difference, and they drill on that. And the minute they let go of those drills, things start to sort of fall apart. You're not as focused. You just have to keep hitting it every day, and then you got to stay at the top of your game. And this is really all coming about because of a conversation that I had with a coaching student this weekend. Every once in a while, those moments and those conversations stick with me for like days, and I'll think, back to what I was feeling, and then something else might pop up even after the conversation where I think, yeah, there's something else that made a difference. So the more I get to share this with you, maybe it'll just help you. If you could just be calm in that moment where you're not too sure if you should be taking certain trades, it's okay to walk away. It really is. And if you miss it, like I said, if you miss a trade and it takes off, maybe it's one of those situations that nobody could have anticipated. Nobody could have expected that. And then maybe it is that a lot of other people anticipated it and saw it, but because they had the information and they had the experience and they have been doing it over and over again. And that's all you need, is to do it over and over and over again and to gain the experience. And there's nothing wrong with you not knowing some of these things now that you'll know in the future. I mean, that's just how it works. It's just how it works. You just got to relax and accept that reality, and you're going to be a lot more comfortable with the decision to say, I think I can let go of it. You're not the only one. Maybe I should put it that way. You're not the only one experiencing these things. You're not the only one going through this right now. You're not the only one thinking these things. We all have. Every one of us. Every professional, every one of us. We've all gone through it. And the biggest difference for most of us is that we tried to structure our lives in a way that we could stay in the game a lot longer. One of the things that you can do, again, is that if it doesn't feel like the right trade or if it doesn't make any sense, stay out. Because if you just keep getting in and it doesn't make any sense, you're just going to keep making mistakes and you're not even going to know why. Like you get into trades and you don't know why, or it doesn't feel right, but it's moving. And like, that's not a trade. That's not a trade that you can analyze. So you can't say, wow, that was a good trade because you made money. Not if you didn't have a plan. There was no structure to it. You didn't know when to get in or when to get out. And you weren't, you know what I mean? You just happened to get lucky and you saw money in your trading platform and took it. That's what a lot of people, that's why I think a lot of people get into this business. Initially, I did it, and my first few trades were great. And I thought, this is easy. Like, this is going to be easy for me. I'm going to crush this. That was my thinking. And then I was in for a huge punch in the face and a eye-opening experience the following week. It was a mess. And I lost everything that I had earned in my first few good winning trades. And then the fear sets in. So, yeah, be careful. Anyway, hopefully that helps. I'm sorry for the rant, but you know, again, if you're out there and you're experiencing this, again, knowing that we're going through this, knowing that I went through it, knowing that it can be solved, something that can be fixed. Um, I think that that should help you. You know what I mean? It'll help you at least get some clarity. And no, the money's not going to come overnight. There's just no way. Like you're not going to be able to, depending on how deep the losses are. If the market's not providing you an opportunity to earn back those losses, like today, I've got a few losses that I want to replace. Market's not really giving me too much of an opportunity, and I sure as hell don't want to jump in to a trade that I'm going to have to sit and watch 10 to 24 hours that goes nowhere. When I know better and doesn't really reach those targets, there's going to be better opportunities during the rest of the week. We know that if we just look at the economic calendar. You see it. You see there's going to be more action and more activity. And then when you wake up and you look at your volume levels on some of these other currencies or other parts of the market, and you're tracking, you know, is today going to be good or is today going to be slow? When you see a good day, you know a good day. You know it's going to be busy. So get ready. And that's what you should be ready for. That's one of the main reasons why I don't want to get into a trade that I'm going to have to watch for the next 24 hours and be concerned about when I know there's going to be some better choice opportunities later in the week that are going to go a lot faster for me.